Hi there, it's Darlene. How are you doing? So, I'm starting off a new mini series on indicators and how you can use them in your trading. Because more and more people are wondering, how do I use moving average? How do I use RSI? What do they mean? And how are they used? So, starting here, I'm going to be working with you and showing you exactly how to set up these indicators on both TradingView and MT4, and also how to use them to spot possible trades and what they're actually telling you, basically. And this will be done in a very beginner and step-by-step fashion. Now, this training is being provided for free. And if you do find it useful, maybe you can consider sending me a cup of coffee. The donation link is pinned to the top of the comments and, of course, in the description. And it sure does help to keep this channel afloat and ad-free. Thank you very much. Also, you might want to check out my website, yourtradingprofit.com. It'll be in the description as well. That is my blog, and I post like beginner tutorials on various subjects all around trading. And it's to help you become a better trader. And so there's a whole lot more information there that you can also have, and you might want to check that out. And also, you'll find that when I'm thinking of what to do for a YouTube video, I'll be posting it there first. I'll be posting a blog first, and then I take the YouTube video out of the blog, so you'll get to see up and coming YouTubes or possible YouTube videos, and you can say in the comments, "Hey, I want one on this," or something like that. That'd be cool, and subscribe to it too. And then you'll get all of these anytime I do post them, and I am posting 3 or 4 per week now. So there you go. Also, if you want to say also what you'd like to see training on, you can sure say it in the comments here as well. So, I'll follow what you guys say. So, tonight, as I say, I'm going to start with moving average, and then I'm going to move on to RSI, and then I'm going to show you how the two are being used together. But tonight is just moving average. Next time is RSI, then the both together. So moving average is probably one of the most common and used indicators out there. Everybody relies on them, it seems, to a certain degree. Most everybody. So what is a moving average? Well, it's a line or lines that plot the average price of a security over a specific period of time. And it's called a moving average because it continuously updates as the price of the security changes over time. So this is showing you 2 moving averages, the green and the red, and I'm going to describe them and how they're used to identify trends in the market. So if the price of a security is above its moving average, it's generally considered to be in an uptrend. If the price is below its moving average, it's generally considered to be in a downtrend. That's just the very basics of it. So now I'm going to show you this video, and it's from TD Ameritrade, and it describes exactly, what is a moving average, the buy points, the sell points, and all those kind of things. And it's really short and to the point, but interesting. They say it and show it better than I could, so we're going to watch that, and then we'll be back here. I'm going to show you how to put the moving averages onto both a TradingView chart and onto MT4, and how to use them. So here we go with TD Ameritrade moving averages. Don't worry, it's real short, and I'll have that link to it in the description should you want to watch it again yourself. It's a good one.
Technical analysts often say the trend is your friend because they think a security that's going up is more likely to keep going up, and a security that's going down is more likely to keep going down. Having a clear view of the trend can help an investor decide whether to buy, sell, or hold a position. However, sometimes determining the trend can be difficult, and that's why this video is so important. A simple moving average is a technical indicator or tool that tracks a security's price over a time period and plots it on a line. This essentially smooths out price fluctuations to give an investor a general idea where the trend is heading. Using simple moving averages to determine trends, an investor can better identify buy and sell signals. To create a simple moving average chart, start by choosing a time frame. A time frame can be any period of time, including a day, a week, or even a month. For this example, we'll define a period as a day. Let's create a moving average using a 20-day chart. We'll take each day's price and add them together. Then we'll divide that number by our time frame number, which in this case is 20. This gives us today's 20-day average price, which is a short-term moving time frame and one that active traders may use. To create a moving average, each day will drop the last day in the time frame and add today's. A 20-day moving average can help determine short-term uptrends, downtrends, and sideways trends. Examining a security's moving average in relation to its current price can help investors identify potential buy signals. For example, when a price breaks above an upwardly sloping moving average, this could mean it's a good time to buy a stock. Another buy signal could be a support bounce. This is when the security's moving average acts as a support level for the price. When the price comes down to the moving average and then rallies up again, this bounce could be used as a buy signal. On the flip side, moving averages can also help investors know when to sell a position. For example, if the stock's price rises to the moving average and bounces, this might be a sell signal. Looking at a simple moving average over a short-term time frame can be very helpful, but it has its drawbacks. One thing to be aware of is whipsaws. A whipsaw is when the stock crosses over the moving average, giving one signal, and then reverses quickly, giving the opposite signal. A short-term time frame like 20 days usually shows more whipsaws, which is why some investors may prefer to use intermediate and long-term timeframes. For example, intermediate-term charts with a 50-day moving average show a smoother average and have fewer buy and sell signals. As a result, the investor may stay in the trade longer. Long-term trends like those found with a 200-day moving average are even smoother. When looking at all these averages together, we can see that the short-term average is confirmed by the intermediate and long-term averages. The main disadvantage of any simple moving average is that they're slow to reflect price changes. Because each period is given equal weight, day 50 counts as much as day 1. As you can see, a large gain or drop hardly factors into a moving average for some time. This is known as lag. Let's look at an example to illustrate this. If you use a simple moving average for buy and sell signals, your stock could experience a huge pullback well before the simple average reflects this activity. To avoid lag, consider using another analysis, such as a weighted moving average or exponential moving average. These types of moving averages consider recent data the most relevant and give it more weight. Consequently, these types of moving average lines react quickly to the security's price changes. This is helpful for active traders who want to place short-term trades. It's also important to note that moving averages don't predict future performance. They only confirm established trends. Even with these drawbacks, moving averages are a powerful tool of technical analysis that can help you determine trends and identify buy and sell signals.
So here we are on TradingView, and I would like to show you how to set up our moving average indicators on TradingView. So it's really quite easy. Here in the middle on the top bar here, where on the right it says publish, and then you go to basically, and then on the left it has my smiling face. In the middle you'll see indicators. I want you to click there. And then, well, I've got all my favorites set up, and so you need to set up your favorites too. So you click on technicals, which is 2 under favorites, donk, and then do a support. What we're looking for is the exponential moving average. So we'll just put in EMA and then have a look at what comes up. And you've got all the ones that I've got starred as favorite. And the one I'm showing you right now is under the 4 favorites. Well, it's at the top of the 4 favorites, moving average exponential, but where it's found is under technicals, then moving average exponential, and then you'll see beside it there is no author. It's just one of the normal. So you want to tap the star beside moving average exponential, and that will put it into your favorites. So then all of your favorites are shown in this drop down arrow right beside indicators. So you click on that, and of course I've got a bunch in there, but the one we just set up is, let me see here, moving average exponential right here. Okay, so let's have a look at it. I'm going to look here. Oopsie. I'm going to click on EMA, and we're going to do our settings for it. So what I want is my length to be 8. This is going to be my fast EMA, which means it's the one that's sticking closer to what the chart is, what the market is actually doing. So we just want to put length. We want the method here to be EMA, not SMA. We want EMA. And 8. And we want it to be blue, because that's what I always have my blues on. And we can take these two off. So, okay. And so now you can see that we have that blue line. Here's another something I should have done with it, though. Let's go back in there. So I can barely see that. I don't know about you. So I like to make the line, oops, not like that. Click on the color, and then you can click on the width thingy here. And then okay. And now you can actually see our lovely new blue line there. And as you can see, it's hugging the chart very closely. Let's put on another EMA now. So we're going to have to go back to the drop down here to choose our moving average exponential. And there we've got a second one on now. So we'll hit that second one, hit the cog. And yeah, we still want an EMA. We don't want these labels on. And this one we want colored red. And we want the hit the opacity up. So there. And inputs, length is 50. And this will show you something interesting. And length here, 50. And okay. There. Now let's have a look. So you've got two EMAs now. Oh, let's put this on the 5-minute chart so we can see what we're doing better. Woo, there we go. All right. So now what we're looking for is when the blue crosses the red. Okay. Now we can see at this line right here, going down the vertical white dotted line, you can see where the blue crosses over the red, and that's where you would put wanting to look to put in a buy. Now see that the blue also crossed the red just before that, just a brief little dip there, right here. Now here's the thing, is the red and the green are still fairly close together. The closer they are together, the less strong the sell signal or buy signal is, the crossover is. So you tend to ignore those ones that are just kind of zipping along, and I'll show you some more of them. Well, that's a huge trend. Okay, in this little section here, you can see that the green or the blue and the red, I mean, they're just kind of tracking each other really closely. You wouldn't put any buys or sells in there. Now, you see a big movement like this where you can see lots of long candles going, and you see the blue, well, it touched the red. It didn't actually cross it, but it touched it, and that's good enough. And when you see the distance between the blue and the red going wider and wider like this, then you know. That's your confirmation to know that, yeah, this is real, and to get in. Where you get out is more on the candlestick patterns, which I'll teach you about sometime, but not right now. So that's where you would get in, sell at the top, or anywhere along where you freak out. But you need to learn how to stay in longer, but I will be showing you that. Now again, the EMA then, the blue, just kind of waffled around. It didn't really know what it was going to do, and it's not crossing the red. It's not showing you anything. Don't do anything. And then all of a sudden here, and then you see where that big green goes up again like that. Well, it pretty much, it almost bumped there, and and then you look at the candlesticks again. And you see there that the distance between the green and the blue and the red, again, are further apart. Then they go closer together, and you don't want anything more to do with it. And even this last crossover here, I don't know if I would have gotten in. It's really not enough, but at the beginning it sure looked good. So it might be a good scalp. So here we are on MT4, and I'm going to show you again how to put moving averages onto a chart here. So what we do is up at the top on the menu bar, right under where it says, number, FTMO demo, and then it goes File, View, Insert. Click Insert. I'm sorry, I'm doing this on an iPad, so it's a little hard. I don't have a mouse pointer to show you stuff. Now on the very top of this drop down is Indicators. Click on that. And then go down to Custom. And then we're looking for EMA, custom moving averages. There it is. They're in alphabetical order. I cheat code custom moving averages. That's what you're looking for, is custom moving averages right there. Now, like in the other one, we can, the one in TradingView I'm showing you is with the values of 8 and 50. Those are useful. I'm going to show you another method of using a 13 and a 26. So simple, we want it exponential, not simple. Colors, this is going to be my fast one, so I want it blue. That one. Want the line a little bit thicker. 2, okay. So there is my number 8 moving average. Now we want another one, so we're going to go through it again. Insert, Indicators, Custom, and Custom Moving Averages. This one we do want to keep red. We want the width to be wider. Come on. There we go. And the input, I really do like that 50, but I used to use a 26. Let's see what that looks like. And we certainly don't want simple. We want exponential. And okay. Yeah, I don't like that at all. Okay, so say I want to change this, because I don't like that red one at all. I would like it out at the 50. Yeah, I don't want it that close at all. I don't like it. So what I'm going to do is I'm going to double click on the red, or in this case, and then go to Properties, and then say I don't like that 26. I'm going to put it out at the 50. So this is highly adjustable any way that you want it. There. Now the 50 goes further out. So on the bottom right hand corner of where it says sell, where you see the blue touches the red, that would be a sell position. And you can see how when the blue drops away from the red and it gets wider and wider and wider, that confirms it. And then as you start getting those really long candlesticks, then it confirms it even more until you're right at the bottom. Then you get that one teeny tiny one, and that's your signal to get out. And that's right, that's it right there. Now, if you're looking for a buy signal, I mean, yes, you could have taken it right at the bottom there, but that's not indicated by the moving average lines. And I'm just showing you where it's indicated on the moving average lines. So guess where the buy signal would be? So again, here where blue crosses the red, that would be a clear buy signal. And again, the blue and the red diverge and they get further and further apart. When they start coming back together again, or you're starting to look at reversals, then that's when you want to get out. For example, at the very top, where the top gray line is, you see in the middle top, you will see a bearish engulfing candle. That means that the candlestick itself is greater than the one prior to it, which was bullish, going upwards. So you see the little empty green one? That's the one going upwards. The one going down is bullish, and it's a very long candle, so that would be your signal, your confirmation to like get out at that point, and you wouldn't want to put in another buy or sell at any point. And then you can see after that point, it really narrows down, like the bands start coming together more and more and more. Yes, the EMAs. And so that's clearly showing you that you don't want to be putting in any kind of buys or sells, especially since it seems to be hitting a line of resistance there. And that's right where that gray line is. See how everything's kind of hitting there from that high and then all the way over? That, yeah, that's showing a definite line of resistance as well. We'll get into support and resistance shortly, though. Another way to use moving averages is to identify trend reversals. So if a price of a security has been in a strong uptrend and then breaks below its moving average, it could be a sign that the trend is reversing, and vice versa too. If the price has been in a strong downward trend and then breaks above its moving average, it could be a sign that the trend is reversing. So here you can see right by where I've got sell, you can see where the market came right through both the red and the blue, and especially, yeah, both of them. And that shows a reversal pattern. So although it wasn't doing much before, oops, well, it's not necessarily a reversal because it was going that way earlier. But when you see the buy signal, that's a definite reversal. And you can see the green candlesticks coming right up through the blue and then the red. And that's a definite, and long candlesticks too. That shows they've got good momentum. And coming up past the sell, or the blue and the red, it shows a definite buy order. And when I say definite, it's as definite as you can get. I mean, it's never definite. These are what we call indicators, and this is one that I'm showing you now. And moving averages should really be used in conjunction with other indicators. The most common one it's paired with is relative strength indicator. Usually have a volume indicator as well, but those three are used very often together. Or moving averages can be paired with the moving average convergence divergence, which is MACD indicator. I use it with TDI. I hope to be going through all of these indicators with you, and as I say, I'm going to do it one at a time. So this is our chart as we have it now, and then I plan on adding another indicator each time and showing you how these work. So that was what is a moving average, what do they mean, what do they do, show you how to set them up in TradingView and MT4, and that's about it. Now, if you would like to know more, I would really suggest going to my website, and if you've got any questions or anything, hit me up in the comments and I'll try and tell you whatever I can. And as I say, stay tuned for more, and we'll be building on this chart, and I'll be showing you how these indicators work together. Then I also hope to show you candlestick patterns and stuff like that. These are all things that you need to know, in your trading journey. Check out the description for quite a lot of resources. I'm going to put up some free training things and such there, and kind of keep that as a section for resources. And so if you appreciate this information, please don't hesitate to buy me a cup of coffee. Thank you very much. And of course, please like and subscribe and check out the website. Thanks a lot, guys. You have a great evening or day or whenever. Bye-bye.